Let's look at NEO/US dollar. First off, read this disclaimer carefully. And do your good deed of the day by liking and subscribing. So we have NEO/US dollar here. NEO/USD is the ticker. So let's quickly, see what's happening in other markets as well. If we go here to the sectors, you can see that energy is, a big performer. Utilities, lowest. Looking at the megatrends, we still see that the blockchain portfolio is the top performer, even though the haircut has been absolutely spectacular. The tokens and NFT portfolio, also pretty good performance, even bigger haircuts, minus 61%. So there's been some pretty substantial moves in this whole crypto space. It's been very rough. Also for NEO, so this is their website. So yeah, DeFi, NFT. Here you can see all in one, all in NEO. So interoperability, native oracles, self-sovereign ID, decentralized storage, NEO name service, one block finality, best-in-class tooling, smart contracts, multi-language. Yeah, this is one of the leading cryptocurrencies out there. And if we go here to the chart, using data from Binance, weekly data points, we do see that the sell-off has been rather spectacular. So the major rally, it did emerge from this rounding bottom formation. Now we have a huge pullback. The problem with the pullback on the weekly data points is that we are very much below here the purple 20-week moving average. It is offering rather solid resistance. So the last 3 weeks we have been really stuck below it. So that is that's a bit of an issue, from a more bullish standpoint. When we go to the daily data point, it actually becomes a bit more promising. We are currently testing the red 200-day moving average, and we do have some decent support there. As far as resistance goes, we do have the purple 20-day moving average. So we have clear resistance, clear support. So basically it's the 200-day moving average support versus the 20-day as resistance. And it is really surgical. I mean, look how surgical the support is, and especially resistance. We are testing the 20-day today as well. The 20-day is moving downwards, sharply. Hence, this is not a very difficult moving average to actually break through. So the bulls should be able to pull this off. There's been some relatively reliable time cycles here on the daily data points. The time cycles suggest that there could be more downward pressure here heading towards later into June. That does fit reasonably with the seasonality of NEO. You see that June is frankly one of the weakest months. July tends to be stronger. The problem with the seasonality is that we only have data back to 2017. Hence, we need to be careful about what kind of conclusions we draw based on the seasonality. But basically, we have had a very, very, very substantial sell-off. So let's actually measure how spectacular this crash was. Down to the intraday low. Yeah, that is minus 72% plunge. That is one heck of a haircut. Hence, it really depends on how fierce the bears are. But we do see a big change here. You clearly have the bears in complete control. Here you could argue we are forming a double bottom, 1 and 2, from a key moving average. So basically, I'm starting to lean a bit bullish here, speculatively, very speculative for NEO. The problem with the cryptos is that the powers that be are really starting to take them seriously as a challenge. So that is definitively something to watch out for. But the entire point of this whole crypto revolution is that it's supposed to not be influenced by central banks and those kinds of authorities. And we could see that decoupling. It could be that soon the cryptos will reach a critical mass in which they don't have to listen to those authorities anymore. A situation in which the cryptos really become the first apolitical currency, because all the other currencies out there are extremely embedded in the political system and are used for all kinds of games. Given that the NEO recently crashed minus 71%, it is not as exactly well suited as a currency, to put it mildly. And just imagine if you were paid your salary in a NEO, that obviously would be very hard to plan personal finances. Yeah, but that's NEO. Now let's look at the king, the Bitcoin index. So we do have that pattern I have talked about, that as a part of this major deterioration, we could basically form a major head and shoulders pattern, and we do have that shoulder being formed. The problem though is that a head and shoulders pattern is certainly not a bullish technical setup. It does mean, of course, that when you form the shoulder we have a rally, and we do have that rally now. But the big question is, what is going to happen the next pullback? I'm not talking about the next crash, but it doesn't go up in a straight line. So when we start to pull back a bit, will we then break through the neckline? Because if we do break through the neckline, that would be an issue. Because the classic head and shoulders pattern is like this. Then you have a bit of a shoulder, and let's roughly draw the neckline here. If we break through that, some would argue that we would have a measured move, which would not be good. Let's have a quick look at Ethereum / the US dollar. Technically speaking, Ethereum looks much better. You do not have that very clear textbook head and shoulders pattern here. You have actually a situation where the right shoulder here, so let's just draw that in. So you have a left shoulder that is very wonky, so it isn't really textbook. Then you have a very sharp head. Then you have a right shoulder that is higher than the left. So it is head and shoulder-ish, but it's not. It is one of the more bullish head and shoulders patterns you can get. So when the right shoulder is higher than the left, that is one of the more bullish head and shoulders patterns. When they are like next to each other, that is more dicey. The benefit of those kinds of head and shoulders pattern from bullish perspective is that you have a horizontal support level, and those are the head and shoulders that can be neutralized by the bulls because of that. The worst head and shoulders pattern is when you have like a left shoulder, and then of course you have the big head, and then you have the right shoulder forming lower. Those are very, very problematic, because not only do you have that resistance from the left shoulder and the head, you also have resistance from the top of the right shoulder. So it's a very difficult situation. Okay, but yeah, Ethereum looks promising, but you could also argue that if we compare the current sell-off with previous big sell-offs, they usually last much longer.